Good morning, everybody. It's the 20th of July. We are Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. Good morning, Steve.
Good morning.
How you doing?
Yeah, not bad, thank you.
Good. Okay, let's get stuck in then. As always, if anybody's watching and would like an opinion on a particular market, feel free to post it up. We'll do our best to cover as many as we possibly can and give you our opinion on where we believe things are headed from a technical perspective. But before we do that, we will be running through the latest headlines of what's been moving markets over the past 24 hours. So here they are, the main headlines. There was a small increase in US retail sales yesterday. The US housing starts did decline, however, from the previous month, but building permits also retreated as well. But overall, a small increase in the retail sales, which is good. The Bank of England expectations declined further following the UK inflation data that we got yesterday. There was a further shift in the Bank of England expectations, with the market now pricing in peak rates of around 5.75%. From 6% ahead of the data. A further 50 basis point hike at the August meeting was also seen as unlikely. However, the Bank of England Deputy Governor Ramsden stated that inflation is still much too high, and if there is evidence of persistent inflation pressures, then further monetary policy tightening would be required. He added that energy prices had fallen more than expected, while other elements remained elevated. The ECB doubts continue. The council member Stornus stated that inflation is falling and more tightening could hurt the economy. There were further doubts whether the ECB tightening cycle would be extended beyond July. China slams speculators. The central bank fixed the yuan much stronger than expected on Thursday and also boosted potential capital inflows, while there were also reports of state banks selling the US currency. And as a result, the yuan posted a strong recovery in yesterday's session. The dollar rebound continues to stall. It has recovered slightly from those 16-month lows on Wednesday. Primarily, this reflected increased doubt surrounding other major currencies rather than strong interest in the US currency. And the dollar faded again on Thursday with a significant impact from the yuan gains, although there was a recovery from the lows. We've seen some strong Australian jobs data overnight. They recorded an employment increase of 32,600 for June, compared with expectations of around 15,000, and the unemployment rate holding at 3.5%, compared with expectations of 3.6%. Data-wise today, we've got US jobless claims and the Philly Fed data, which will be due out a little later on. There is little chance that the data will influence next week's Fed policy decision, but weak data would continue to dampen expectations of any further rate hikes. We did have some earnings yesterday as well from some of the tech giants. So the big seven have kicked off. So this is, I think, so it's Tesla, Netflix, Facebook, Google, Nvidia. Basically, these seven stocks make up around about 50% of the gains in the Nasdaq that we've seen. So they are a very, very big deal. They both came out after the bell yesterday, and Asian markets were fairly mixed off the back of that. So appears to have been a pretty good start to earnings season, but there have already been some pretty huge gains so far in the US market. So treat that with caution. Okay, Steve, let's take a look at some charts. What's happening in cryptocurrencies?
Yeah, sure, we'll have a look at that. I'm sure they've had a good start to the earnings season because they put their prices up. That's why inflation's gone up, Joe. It's like
Right.
double-edged sword, that. I'm not sure
Indeed.
about it. Anyway, Bitcoin, we're looking at Bitcoin. It's at the moment, it's in this nice corrective wave higher. We're seeing the price action trading in this range of resistance, what we'd call it at the moment. It will be support if we manage to get above it, but we haven't done so far. 31,000, what's the highest we've been? 31,800 is the highest we've been over the past month, and the measured move target for the inverse head and shoulders formation that I drew on here a long while ago, is playing out quite nicely after the rebound off the neckline at 25,500. Is projected to be 35,000. Also, we've got a bullish flag formation which has a projected measured move of around 36,000. The real sort of market that people are interested in at the moment is obviously XRP, after Ripple won its case against the SEC and price action has exploded higher through the resistance, which is around about just below the 60-cent level. Managed to get up just close to that $1 level. Actually 98.5 cents is a 61.8% Fibonacci retracement from the swing high of the 6th of September. Actually, I'll just put another one on there. We've also got it would be 112.70 would be a 50% retracement of the all-time from the all-time high all the way down to the most recent lows. Let's get the 38.2 on there as well. Where does that come in? 38.2% fib is actually not far off where we hit on the day that Ripple won its case. So we have hit a nice resistance level. What do we do from here? Well, you know, this isn't like a normal asset or security. Obviously, the SEC know that now, but it doesn't trade in the same way as we would get normal products trading, where there's good supply and demand. This is mainly a demand market, people buying. There's very few people who would have any reason to short this market unless they're probably trading against another cryptocurrency or something. So this is very much like almost feels a little bit like a one-way street. It should only go up because there's no real sellers out there taking short positions. That is the case. I'm sure some people will argue that, but that's my belief, and you're not going to change it. Anyway, where's the support here? The support is around about that dip back down to 66.70. Above there, we've got the Nichimoku cloud support coming in around 70 cents, and resistance, as I say, at that 85.30 level, 38.2% Fibonacci retracement of the all-time high to the most recent swing low. Above there, we've got the actual extension high. I've got up to just about 95 cents, and the 98.5 cents and $1. It will provide more resistance. At the moment, the 4-hour chart showing a little bit of exhaustion here. We've had this reaction from the retest of support, pushed back higher and stalling around these levels. 4-hour chart, you can see quite clearly a bearish engulfing after a shooting star candle. So maybe this could be the interim resistance level. Let's watch that closely. Taking a look at more solid types of commodities, gold, and gold is having a really nice move at the moment. It's reacted from this morning doji star formation from 1893, and it's extended the move higher over the last month. We got up to 1987 this week. We can see that the 61.8% fib is at $2,000. That's the main resistance level to watch. Now, that'll be a decent target level for any short-term bulls or longs in the market. If we look at the daily chart, we can see we've run into a little bit of resistance around this level, and it's 50% fib, 1980. It's a level we've sort of picked up on during the week, and 1960 will provide a little bit of support because that was a previous swing high, will now act as a temporary support. And below that, we've got 1945 and 1935, and obviously that 1887 level, which I talked about. So on the upside, obviously, this is all really focused around the dollar. The dollar's trading around that 100 level. Hasn't closed below it yet. So I think that would be a key. If we get a serious break of there and a decent close below 100, psychologically, that could have an impact on the dollar value moving forward. So at the moment, dollar on the back foot, gold is benefiting from this, and yeah, looking pretty decent. Although this the rally, the average true range is moving lower. Momentum, is it going to stall now? We'll wait and see. But yeah, all about the dollar really. Crude oil has extended higher as well. We had oil inventories yesterday. Price action has continued to move higher. Got up to a 78.6% fib of the most recent swing high down to the lows. That was around about the $72 mark. And let's break it down. We are bullish on the 4-hour chart at the moment, although the last little move we've seen has stalled and turned around. So maybe we're getting some sort of shooting star candle there. So that might be something to watch. Maybe a potential for a gun to head trade idea. Looking at the hourly chart, yeah, stalling at that 78.6% fib. could be quite a nice opportunity to just fade and retest the previous support. That's about that from the commodities. We'll get Joe to take a look at the FX before I dive into a few indices which might be interesting.
Okay, thank you, Steve. Let's get on to the FX charts then, starting off with the dollar index as we often do. So as Steve mentioned, this is kind of front and center at the minute. It's driving most of the price action on other assets that we look at, such as commodities and, of course, cryptocurrencies. So the story here, we saw a breakdown through this 100 spot 82 level, big impulsive move through that. Big collapse really in the price of the dollar index. The 100 level we thought may do some sort of job as a psychological support level, didn't really. We come up just shy of the 99.41 level, which we've got there as a dotted blue line, which is some support from way back here in April 2022. And we also have this 61.8% fib level at 99.17. So those are the major support levels to watch for on the downside. In the short term, we can see there has been a bit of stabilization from these 16-month lows. We've got this doji candle that we formed on Tuesday. A decent move to the upside yesterday, but a little bit of a pullback from those highs that we reached overnight and following through to the downside this morning. So the major resistance is clearly these levels above 100 spot 82 to 101.01. In this region here, we may see some further selling interest. That will be the first kind of technical retest of this major support level, and it'll be interesting to see what sort of reaction, if any, we get on a retest there. The preference would be to sell, given that the overall trend remains bearish, and obviously we've had a big breakdown here. So in the short term, it looks as though we may see some range-bound price action up to potentially 101.00 down to 99.42. So expecting things to trade in that range for the time being. Okay, looking at euro US dollar, we've obviously had a big break to the upside. This is the inverse of what we've just looked at on the dollar index chart. Interestingly, though, this actually tapped that 61.8% fib level at 112.74. We pretty much touched it to the tick before then forming a doji candle pretty much at those highs. So that's a bit of indecision, potentially indicating a bit of a reversal in the short term. So that's a bit of a concern. Obviously, we saw some follow through yesterday, bit of a bounce today, but is that going to reassert itself? Are we going to be able to challenge these highs at 112.74 and get back above those? Or are we going to see a minor correction and a pullback towards this newly formed support around 111.02? Certainly both possible, given that we've got these doji candles and then that touch of that 61.8% fib level suggests that maybe there was some profit taking that took place there, and we need to wait and see if there is any further appetite to continue dragging this higher. So potential maybe for a corrective pullback towards 110.95 on euro dollar. Let's take a look at cable before we look at some of the requests. So overall, this still remains in a bullish phase. We can see the long-term uptrend remains in place. We have seen a bit of a correction take shape over the last few sessions. If today ends up red, that'll be the 5th consecutive day of losses on cable. But all in all, the trend remains pretty positive. We've got some support around 128.48. That's roughly going to line up with this uptrend line as well. So any pullback into this region, I think, will just be a minor one. And providing this long-term uptrend remains in place, then it may just be another opportunity to buy the dip in anticipation of a continuation higher. So that's still looking pretty strong overall. In terms of comments, we've had euro US dollar, which we've just been through. So hopefully that was okay. In fact, let's just take a look at that from an intraday perspective, because potentially we're getting some sort of top information here in the very short term. Can we see any evidence of that on the intraday charts? Let's just take a quick look. So this is the hourly chart here, and this is where we're getting this kind of consolidation at the moment. Potentially a bit of a top pattern. We can see price action is kind of rounding off a little bit. And we've got a short-term sequence of lower highs that seems to be forming here. We've got our 3 touch points to indicate a trend. So maybe in the short term, we will start to see a bit of pressure here on the downside. Yeah, maybe targeting a pullback to that previous breakout level, which on the daily chart was 110.95. So if we're looking at that on the intraday charts, let's just get a line on there at 110.95. That's all the way down. there. So if you're feeling brave, from a risk reward perspective, trying to target and move down to that level could be quite nice. Obviously, it was all dependent on where you put that stop loss. The safest one, of course, would be above those highs. The only issue with that at the minute, from a risk reward perspective, is it's just a little bit under 2 to 1. It's coming in at 1.91. But there are plenty of options there if you wanted to look at a more aggressive stop, maybe something around that. Then you're taking into account these highs here. And of course, if it breaks up there, then it kind of invalidates this sequence of lower highs, at which point you probably don't want to be in the trade anyway. But yeah, maybe some opportunities there on the short side with Euro US dollar if you're feeling brave. Okay, let's take a look at Sterling Oz because that's been requested as well. One of the biggest movers to the downside today, looking at my watch list, down by 0.93% as things stand. Now, as we saw with the cable chart, sterling has been trending higher for a significant period of time. So these are back down from September 22, nice uptrend in place, but we can see we are now testing that support line this morning. So it's coming under pressure. We can see these blue lines here are significant resistance levels from weeks gone by. This is dating back to August 2021. And then we saw another test of that level in January 2022. We did overshoot it a little bit. The pullback hasn't really found support at that level. In fact, coming under a bit of pressure today. So again, potential for a bit of a reversal here, maybe. Do take into account the fact that we've got this uptrend line in place. If you look at the intraday charts, then we can actually see a bit of a clearer
Head
image
and
of a
shoulders.
top
Look at
pattern
that.
forming. So this is the hourly chart. And yeah, it does look like it's under a bit of pressure here. So short term, there might be some opportunities on the short side to think about getting short. So we've got an upward sloping trend line here. I always prefer to see a horizontal break. So I'm going by the point where the right shoulder starts to form as being my sort of horizontal trigger line. We also saw a level of support there provided on a retest of that level, but over 2 o'clock this morning, we saw a break through that level. And prices have continued to move to the downside. So I would potentially be looking for shorting opportunities on that today. I'd probably go with a stop loss above the high of this impulsive candle that created the breakdown in the first place. So that would be still around 70 ticks if we're looking to sell into a retest of that level. So you might require a bit of patience in order to try and get a fill there. And in terms of the target on the downside, then we can simply do a measurement from the high, from the top of the head down to the neckline and project that lower. And that comes in at around 186.36. So potential there for a risk reward trade of 5.3 to 1. So very nice indeed. Of course, not a guarantee, but a really nice looking pattern there that seems to be playing out. But don't forget, we still do have that major support line to be concerned with on the daily chart. So that might trigger some bargain hunting, given that the trend overall has been pretty strong.
Yeah.
I'll leave that there.
Yeah, nice, Joe. I think that sterling retracement makes sense, especially when they're paring back the expected eventual highest interest rate from 6.5 to 5 3/4. So, yes, I mean sterling's still strong at the moment, but nice potential there. I'm going to be looking at that gun to head, I think, Joe. You better get in quick. Let's take a look at FTSE. So let me just bring this up. Nice reaction higher yesterday. Nice strong recovery and bounce back from this almost like a morning inverted hammer star formation, whatever you want to call it, but it's the same sort of formation that we like to see at the bottom of a trend, and a nice reversal has taken place. We've broken up through resistance at 75.60. That will act as support now, while yesterday's high at 76.26 will be resistance. Above there, we've got horizontal resistance coming in all the way up to 7,700. On the DAX, we've got this head and shoulders formation, which has like got a double right shoulder now, really, that we've got to consider. So you could sort of like either wipe this pattern out of your thoughts completely, or have something like that. It could almost eventually be a double top. But the candle, yesterday's candle, looks a little bit suspect to me, a little bit of a shooting star type candle where we did make great progress, got up to 16,241 very early in the session, and then gave up those gains towards the end, actually closed lower than the previous day. So not looking so great there. Really, for me, the next level to watch on here from the support perspective would probably be just around about that 16,000 level. Just below and just above, we've got previous levels that which should add some support there. So that's the level to watch there. Obviously, the yesterday's high 16,241 resistance on the way up, and then we've got 16,427, which is the next level after that. So they're the levels to watch in GER40. Again, good reaction yesterday. Shooting star candle formed, however, so not the greatest finish to the day from a long or a bull perspective. We have had a nice extended rally higher, a little bit of profit taking, obviously, after some decent results yesterday. Price action still trading around just above that 35,000 level, but obviously yesterday's high 35,238 will be resistance level. Support at yesterday's low just below that 35,000, 34,933. They're the levels to watch as far as today's concerned. Nasdaq stalled. Obviously, we've got the tech sector, bit of a shooting star. Are we seeing an evening star formation? If we are, then that's not great. So at this point, it would, for me, if we were to close right now, obviously we've got a whole day of price action to come. If we were to close right now, for me, that would be bearish, and I'd be looking to use that as confirmation to take profit on whatever longs I'm holding in the Nasdaq, or potentially a good risk reward trade for going short, targeting maybe a move back to 15,351. And S&P. S&P wasn't as bad, doesn't look as bad technically as, although it's still a little bit shooty star like. Great. A bearish engulfing forming at the moment as well on today, but we've still got more results to come, so we've got to really sort of consider that. But yeah, looks like at the moment things are topping out, but as I say, there's plenty of time in the day for things to move. So yeah, I wouldn't be surprised to see things change as we move on through the trading day. Yeah, that's about it. That's about a wrap there. Reach out if you want to talk about anything else, but otherwise we'll go to our favourite part of the show, Joe.
Yeah.
Gun to head.
Is it? It used to be.
Well, no, it used to be. It's not so good at the moment. Hands up, it's not great. We both had the losers on Monday, was it?
Yeah.
Tuesday.
Yeah.
So yeah, and yeah, I was a bit frustrated actually, because one of the trade ideas I was looking at was after trying to sell gold a couple of times and failing, I was looking at maybe the potential for the break up in gold, and it happened. It got up to that 1980 level. So I wish I'd have gone for that one, but hey ho, that's the way it goes.
Indeed. Okay, so just a reminder of what we're doing here. So we pick trade ideas live on the stream as if we had a gun to our head. A couple of basic rules to follow: stops and targets, of course. We want to mitigate risk wherever we can. In terms of the risk reward ratios, we must have a target of 2 to 1 or better. So every £1 that we risk, as a minimum, we want to be looking to make at least £2 on these trade ideas. So obviously we will adjust our trade ideas and sizes accordingly. The trades are closed at 9 p.m. UK time, just means that we don't have to worry about any overnight risk. We come in with a flat book. We don't get any additional charges from swap fees or anything like that. It's just, there's no sort of huge reason for it, but just something that we've always done. So we'll continue to do that. And we risk 1% of trading capital per trade. And we are doing this on a live account. It's not been a great few months for us for whatever reason. We've got plenty of historic results that suggest that we do know what we're doing, but certainly at the moment we aren't getting that validation. But we're confident we can turn it around. We continue to live to fight another day by ensuring that we don't risk the house on all of these trade ideas. We are only maximum risking 2% of the trading account per day.
Yeah, we're only risking it like a brick or something, like
the
of a
brick of a house. Yeah.
Yeah, and there's only 100 bricks.
If we keep going, we might start letting some water in. So we have to be a bit careful. because then it could all
Yeah.
come tumbling down around us. But it won't, because we are very consistent and dedicated to our approach. We just got to continue to believe, continue to do the right thing that we believe is right, and hopeful that things will turn. So, Steve, what you got today?
I don't mind you going first, Joe, because you've sort of like given me some inspiration, shall we say. I'm selling sterling, but
Yeah.
you go ahead. I'll let you choose which one you do, and then I'll dive into another one.
Well, I do like this sterling Oz one that was mentioned,
Yeah,
but
I like that as well.
I mean, I don't know if I want to sell it now, because it's obviously broken through that neckline pretty severely. I mean, ideally, I'd want to sell into a pullback just to improve the risk
Yeah,
reward of the trade idea. Obviously, if I were to do it right now, I think you need to have a pretty wide stop loss. Where do you have it? You don't want to just have it a couple
yeah.
of pips above a neckline, because chances are it get there and take you out. So yeah, going to have to avoid that one for now. And try and find something else. I'm semi-tempted by euro dollar, to be honest. I mean, it doesn't give me the same sort of vibes that sterling Oz does. But what I do like on the daily chart is that it's rallied into that 61.8% fib level there, and potentially forming a bit of a short-term reversal. So we've got a bit of strength today to sell into, which again is encouraging. If we take a look at the intraday charts, maybe forming some sort of top pattern here, but certainly not confirmed. I mean, if it maybe, that would be a neckline of a very kind of shallow looking top pattern,
Yeah.
which we did break at that point there, which was 3 o'clock yesterday afternoon, but we came rallying back pretty strongly. So I was
I
also
like that
looking,
one. I like that one as well, Joe. I do like that because
yeah,
I feel dollar is like at that 100 level. We might get a little bit of a fight back from the dollar. That's yeah. So
I
carry
was
on.
also looking at the market profile chart. So this is taking it from a month view. And all of the price action here, all the trading has taken place at this level. So this appears to be where the point of control is in the market. So to break beyond that, I think it's going to be a bit of a challenge in the short term. Clearly appears to be a lot of trading that's taken place here. So maybe that's going to act as a bit of an anchor for this in the time being, and sort of prevent prices from moving higher. So let's have a go, shall we?
Yeah.
Talked about it enough. Let's get that on. Stop loss, I mean, ideally above the high, but I just want to get a bit better risk reward. And if it's going to break up through this short-term uptrend, then kind of invalidates what I'm trying to do anyway. So sell it at market, stop loss at 112.50.
Yeah.
Targeting a pullback to that major level that we've discussed on the daily chart, which I've got at 110.95. And we can see that somewhere around
3.7 to
here.
1. Is that about right?
Yeah, that will do very nicely.
That'll do, donkey. I like that, Joe.
So we're on. Got the trade idea on now, Steve. You're looking at sterling, are you?
I was looking at sterling, but yeah, I feel a little bit similar to you. I feel there's going to be that little pullback before we get the extension lower, and I was hoping to see at least one market maybe which was going to argue against that, but I'm not seeing it. Especially the last hour, we've seen a bit of a rally, so it's put me off a little bit. One thing I always I like to revert to, is oil. Now, looking at oil, we've had obviously a nice rally in the last month. However, we have had a price action stall. We had the last Friday was a bearish engulfing candle. We had a fight back on Tuesday, but Wednesday's price action. Oh, let me just double check on this, Joe. Yeah, it is right. Yesterday's price action was shooting star-like, so could we potentially getting a top here? And if we look at the hourly chart, a little bit of a head and shoulders formation gives me a little bit of hope that maybe I can pick a winner here. It's always a bit of a tough one. It's always quite volatile, and looking really at a pullback to there. It's just about where I'm placing the stop, obviously. The shame is we're sort of trying to capture this before 9 o'clock. But anyway, let's try and see if we can get something on. I'm going to sell, and I want to risk 1%. And yeah, I want to target a move to around about that 74. Well, I'll leave it there, 74.23. Stop on this is 75. I want it above there, 75.62.5. Might go for that, Joe. There we go. Bring the stop in. Quite aggressive one, mate. No messing about, and targeting a move to 74.228. So that's what I'm looking at. Quite a tight stop. And yeah, looking for a sell-off, breaking this support, head and shoulders formation, and getting back to these support levels down here. So yeah, going for it. I think we're sort of like really going for it. We're trying to get some decent return, aren't we? We're chasing it a little bit, Joe.
Yeah. Obviously that can be when things get dangerous, when emotion comes into it, and it's something that we all have to deal with. So yeah, we will continue to keep each other in check as best as we possibly can, and you know, prevent any over trading or silliness. But yeah, I think they both look you know, reasonable trades today. So let's see what happens. Okay, let's have a look at the data that's due out today, just to keep us up to speed with that. We've got US jobless claims and the US Philly Fed survey both out at 1:30 UK time today. And tomorrow morning we've got UK retail sales. So was there an error in our report? Because I thought I already mentioned that. So it's housing starts we had out yesterday. Sorry, US retail sales, sorry. Yes, we've got UK retail sales tomorrow. Next week, we've got central banks all over the place. So we've got US Federal Reserve, ECB, and the Bank of Japan, as well as some global PMI data. So plenty to keep us interested next week, but certainly this one isn't done, and there is still ample opportunity for volatility. So let's leave it there, Steve. Thank you, everybody, for watching, and we will be back tomorrow morning.
Yeah, cheers all.
Bye-bye.